Welcome back. My name is again Tommy Blackburn with Mason & Associates. I'm a financial planner, advisor here, as well as a CFP and a CPA, and we specialize on federal employees, and we hope that we're giving you some good information in these episodes. If you're interested in becoming a client, please check us out at masonllc.net. You can request an intro phone call. You can also listen to our podcast, and we have one in particular about our services and what the process is to become a new client. So in a previous episode, or another episode, my colleague, John Mason, talked about FEGLI, Federal Employee Group Life Insurance, Option B. Not to be confused with BASIC, but Option B. And in particular, he was talking about before retirement. Today, we want to talk about what FEGLI Option B in retirement, approaching retirement, what that looks like. So we have a few options there. Now, in the last episode, John made a good point, which is that we're big fans of taking full survivor benefits. And if we do that, that is a form of life insurance. And in general, we believe if you can afford to retire, you can't afford to die. So many times we would question whether we have a need for life insurance in retirement. Maybe sometimes it does make sense. Many of the times we think no. Now, this is not to be construed to mean you should just go out and drop and get rid of your FEGLI life insurance or other life insurances. Just means we want to take a hard look to see what makes sense, particularly with full survivor benefits. Now, previously, John spoke about how expensive FEGLI Option B gets as we go through those 5-year brackets. And in particular, if we're going to carry it into retirement, you can see that cost double every 5 years or more. So our options as we get ready to retire is we can either drop it, just 100% get rid of it, stop paying for it now. We can elect a 100% reduction, or we can keep it in place. We can keep it in place, however, that cost is going to be expensive. We may not elect the we may not decide to drop it if we are approaching age 65 or past age 65. In those cases, we usually want to elect the 100% reduction. What is the difference? Why would we say that? The reason is because with the 100% reduction at age 65 or later, you no longer pay for it, and it begins reducing at 2% per month until it's gone. So therefore, if we've already gone that far in time, we're that close, let's just do that option, because if something happens, it's been reducing, but we still had something and we weren't continuing to pay for it. The other option too is even if you decided to, let's say you retired at MRA 57 and minimum retirement age, for make clear what that acronym was, but let's say you retired at 57 and you had your FEGLI Option B multiples still in place. You could maintain those and you could change your mind later and say, you know what, I actually want to do the full reduction. The way that's going to work is you're going to continue paying for it until you get to age 65, at which point it's going to begin reducing. That's been a little bit of information about FEGLI Option B and the different multiples. Hope it's been helpful. Please shoot us your comments and your questions. Check us out at masonllc.net, and we'd love to hear from you, and we'll see you next time.